Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times.
Hello, and welcome back to the Fintech Times News and Views podcast. I am here as ever with Francis. Sadly, no Tom again this week, but that's all right. Francis, how are you doing this week? How has it been for you? I mean, we're in the run up to Christmas now. It's all festive fintech fun, right?
It definitely is all fintech festive fun. Gee, I almost stumbled on those words there. The alliteration got me. Yeah, it's been a very good week. It's been a bit slower. I definitely feel like last week I think I was saying that it feels like Christmas and the holiday season because of the weather. Whereas now I think it's just the slowing down of the news. I think people are sort of almost calling it for the year, and it's definitely a bit quieter now, but it's been a good week, and looking forward to the topics that we're going to be talking about today.
Yeah, you're absolutely right. It's definitely got to the circle back season of, we'll hit on that in January. So definitely quieting down. But still, we're here to talk about fintech, which is very exciting. What is the story you've brought to discuss today?
So today I'm going to be talking about fraud, once again, and discussing some of TransUnion's latest findings.
Lovely stuff. And I am going to be talking about GenZ lending habits. So I'm going to let you decide, because I always make you go first, but I'm going to let you decide if you want to go first this week or if you want me to go first. I'm putting the power to you.
You can go first, Polly. We'll switch it up. You go first.
We'll switch it up. I very rarely go first because I always make you and Tom do it. So this feels good. So anyway, story this week: GenZ borrowing to survive. So this week, GenZ are borrowing to survive, according to Lenvy. They have revealed some lessons for lenders to help them engage a younger audience, because the way people borrow and perceive borrowing is changing, with the new report looking into sort of the future of what a future borrower could look like. So GenZ currently accounts for around 15% of the UK population, and our lenders continuing to voice challenges regarding attracting and retaining young consumers. So a lot of lenders are really interested in ways to how to make their offering more engaging and attractive to a younger audience, and Lenvy has created a report highlighting what it takes for lenders to engage Gen Z. So of course, Gen Z are the digitally native generation, very, key on social media, but still sort of looking for financial advice in a variety of places, as social media, online, and their family. So 43% of young people place parents or family as their primary source of financial education, according to the Lenvy report, versus only 10% turning to influencers and podcasts, which I thought was a really interesting stat. But anyway, I just thought this was an interesting article to bring up, because I think a lot of the time we kind of talk about what is the future of the industry, and especially the time of year where now we're like thinking ahead to 2025 and wrapping up the lessons from 2024. So it kind of felt really relevant to be starting to think about kind of the future. And from a lending point of view, we talk a lot about different lending services and different ways to manage finances. I know last week we kind of talked about it quite a bit. So I thought it'd be a really interesting one to bring up in terms of kind of how the financial industry can really take a good look at what their consumers want and make sure that they are really keying into that and actually providing products and services that make sense for the people that they're trying to target. And when we think about Gen Z, a lot of Gen Z are still very young. I think they're sort of 20s, early 20s, but in the prime kind of generation for lending products, specifically when we're thinking about the cost of living crisis and how a lot of Gen Z people will either be sort of at university or really still kind of starting out in their career and maybe only just thinking about moving out and things like that. So I think it's a really interesting sort of segment of people, especially when we're thinking about the lending situation. And one of the interesting stats from the Lenvy report is that it found 81% of Gen Z borrowed money, and the most popular form of loan comes from the bank of mum and dad, with 40% relying on parents for cash injections. So I just thought was a really interesting, where actually what the report was saying is that even though Gen Z are borrowing from their mum and dad, their parents are actually borrowing a lot of the time from, traditional lenders and credit agreements, so almost getting themselves into debt in order to be able to help fund their children. So I just thought that was a really interesting stat. But I guess what I kind of wanted to talk to you today is what you thought kind of lenders really need to prioritize when we start to think about the next level of next level of consumers, next level of customers. Do you think that, a lot needs to change when it comes to how lenders are sort of positioning their offerings to younger people? There's Gen Z, but then there's also even younger than that. But then I guess on the sort of flip side to that, if lenders start positioning themselves to service, Gen Z, are we then going to start seeing them leave out older members of society? It's kind of a really interesting question. I think borrowing and lending and credit and debt are all really interesting ideas, and this idea of like the future borrower is one that like really intrigues me, especially kind of when we think about the economic situation and everything that we've really talked about over the past couple of weeks. So I'd love to get your thoughts on this, Francis. What do you think about kind of the whole lending situation for Gen Z right now?
It's a tricky one, because I think for the most part we're probably not going to see much change. I think due to the way we grew up and the way that like the next generation is growing up and so on, I really think that the digital first attitude to that, or like people have, that's not going anywhere. That's always going to stay now. And I think organizations are quickly switching onto that and catering for it. Interestingly, though, what I found from the article is that although we are technically the digitally native generation, I don't know about you, but when I was brought up, I was always sort of told by my parents, don't trust what you see online. And because of that, I feel like a lot of that stat where it said not that many Gen Zers actually trust influencers and social media doesn't really surprise me, because I feel like the generation's mums and dads, like our parents, were constantly warning us about the dangers of trusting things online. So I feel like it doesn't surprise me at all that the idea of bank mum and dad is still very much a thing and not something that sort of has expired and is long gone. Saying that, based on what we spoke about a couple of weeks ago, where we were saying that I think it was Generation Alpha are now turning towards BNPL, and I think what I remember we were saying is that the people that would have to pay the collateral or the collateral of any mispayments would be mum and dad. But I do think that as organizations sort of tailor themselves for a younger audience, we probably will see there's always going to be a reliance on parents, I think, for knowledge and for actual finances. But I do think that we probably will start to see sort of a smaller shift if organizations start to focus on a younger audience and trying to make financial education a bigger thing from a younger age. But ultimately, I think everything's sort of in motion already, and I don't see it really veering off that too much.
Yeah, I think it's really interesting that you brought up the whole sort of like almost aversion to like what you see online, because you are absolutely right. Like, I do not trust anything online. I don't even trust like emails that I get half the time from like banks and financial providers that I'm actually, using their products for. So I think you're absolutely right. I think there is this, even though our generation, though I think are you Gen Z or a millennial? Because I'm just a millennial.
I'm Gen Z.
You are Gen Z. So I guess we're two different generations. We're pretty much the same thing. So like our generation are very, very digitally savvy, but I think there is still a lot of wariness there, that you're absolutely right, that we do inherit from our parents, and this idea that you can't trust anything online. A lot of my friends at university and even now will not use like banking apps. They will not use Apple Pay or Google Pay or anything like that because they don't trust it. I think one of my friends doesn't even use contactless because somehow that's, just dangerous and scary to use. So I think you're absolutely right, and you've really hit a nail on the head there. And I think it's really interesting. And I guess this idea of bank of mum and dad also really intrigues me, because I think, we rely, as a generation, there is a lot of reliance still on parents. I think, our generation are living with parents for a lot longer than maybe other generations did, and moving out a lot later, and still having kind of that relationship with the parents in a more traditional sense. But then I think it also kind of gives me the question of like, what about the people that can't rely on their parents? And that's kind of, I wonder if that's a key demographic here that maybe are being missed out when it comes to sort of lending and credit and things like that. This sort of circle of people that can't rely on bank of mum and dad and that maybe aren't being served by traditional lending products. I wonder if that's a niche there that, you know, some fintech is going to come along and like really snap up, because, you know, that's what fintech does. But yeah, I think it's a really interesting topic. And I think when it comes to sort of lending in these kind of like sectors of the industry, it's still very traditional, right? And it's just interesting to see how maybe things might change. And but to some extent, I think you're right. I don't think things are going to change very much at all. So it's one of those weird sort of chicken and egg situations, isn't it? You wonder what's going to come first. Are we going to start demanding more products, or is the industry going to change first to what it perceives to be what people need? So yeah, it's interesting. I think it's interesting.
Probably the latter, I'd say. I think the industry's got to be the one that innovates, and then that innovation is probably going to drive more demand from something. But yeah, it really could go either way. And the old classic from here is only time will tell.
Yeah, no, you're absolutely right. Absolutely right. But anyway, why don't we move on to your article, which is also about young people, if I am right.
It is indeed, although possibly not in as good of a light, because the article that I'm going to be talking about today is, as I mentioned before, comes from TransUnion, its latest findings, and it has revealed that firms are still facing a battle against first-party fraud, because 43% of respondents, users and consumers, don't feel their income is keeping up with inflation. And interestingly, it's the younger age demographics, including Gen Z and millennial customers, that admitted they would be more likely to falsify information. And 44% of 18 to 24-year-olds indicate that they would consider giving incorrect personal details. Meanwhile, 38% of 25 to 34-year-olds say the same. While 7% of adults remain unsure if they would provide false information, 74% said they would be unlikely to. Meanwhile, 19% of adults have admitted that they would consider providing incorrect details to get a preferential rate on a financial product. So, consumers may lack awareness of alternative sort of legal ways to get better deals, and the report does a good job of identifying some of these. So it says that just simply taking the time to shop around, accessing pre-approved deals for financial products, or checking your credit score and taking simple steps to improve it. And the article found that 86% of people who used a credit monitoring service in the past say that it ended up helping them with their finances in at least one way. And these ranged from improving credit scores to checking for fraudulent credit applications using their ID, identifying opportunities to refinance their current loans or obtain a lower rate on a credit card. So I wanted to sort of discuss this with you in the fact that, does it surprise you that it's the younger people that are saying that they would be more open to taking advantage of a system and perhaps abusing financial service providers and abusing services that aren't for them? Or does that sort of come as no surprise? Is it something you'd expect from sort of a generation that's perhaps being brought up in a more economically challenging time?
You know, that's such an interesting question. Is it a surprise? I don't know if I'm like super surprised. Like you say, you know, it's the past, you know, 20, 30 years economically has been very challenging, and I think growing up in that leads you kind of to a lot of different, you know, doing different things to try and get by, and I guess this is one of them. However, I don't know. It's really interesting, and I wonder, I'd love to get to kind of the bottom of why, like, other than obviously like finding a better deal, getting better rates, getting better products, whatever, like that you can kind of understand. But I guess like why sort of fraud in this way is a thing, and I kind of genuinely believe that a lot of it comes from, it kind of feels like a victimless crime, right? In this very specific scenario, I think, you know, one of the things that the article was talking about was like, you know, giving false information, like opening an account with a different email address, or like putting someone as a named driver on your car insurance when they don't really drive it. Doing stuff like that, obviously, it's very minor, very small. That doesn't feel like fraud. And I think it almost feels like, what are the consequences going to be? First of all, it's kind of like, how is anyone ever going to find out? I doubt any company has like the manpower or even like, the AI computer power to check every single thing and follow up with everyone and going, how do you actually drive this car, or are you just lying? And I think there's just an idea of, well, it just does feel victimless in that no one's going to find out. You get yourself a slightly better deal. You get to do this, that, and the other, and no one's getting hurt at the end of the day. It doesn't feel like fraud, and I wonder if that is a kind of result of a lack of like knowledge, a lack of awareness in that sense, because I think there is a lot in terms of the financial world and the way that consumers, we as people, interact with it, that is very much left up to pure, what's the right word I'm thinking of? No one really teaches you this stuff, right? No one really teaches you how to like do your car insurance. No one ever teaches you how to do this, that, and the other. And so I wonder if it's like a lack of knowledge and a lack of understanding and so much kind of like red tape and confusing jargon that leads you to think it's okay to open a bank account with a different email address because no one's ever told you that it isn't okay. And I wonder whether that comes into it. But I think, at the end of the day, it's a really tricky one, because I do think it does just come down to the economic situation. I think, it's always about trying to get a good deal, right? I think everything in society is just trying to get a good deal and trying to feel like you've got something for your money and got the best deal possible, whether it's with, insurance or financial products or just generally like buying something. So I guess I can see why people wouldn't be bothered about doing that in whatever way possible. But yeah, it's a tricky one, isn't it? It's a really tricky one, and something that I genuinely hadn't really considered, but it'd be interesting. And I wonder, I mean, I guess a lot of young people do it, but I know there's going to be a lot of older people that do it as well. I don't think we need to be exclusively blaming young people here, but it's something that I can't think how you combat other than telling people not to do it, but then they probably just still do it anyway.
I mean, I think you're absolutely right in the sense that it's not just young people, because you're right, 100% older generations are also doing it as well. But I think one big thing for me that I think is a huge reason why people use different emails to sign up to things is just that offer, that initial sort of new customer offer. And I feel like if organizations had a different mentality, instead of we've spoken about it before, and I know we've done loads of articles on it, and it's the idea of retaining customers rather than necessarily getting new ones. And I feel like if organizations were doing deals that were very similar for new customers to existing ones, then we probably wouldn't see as much first party fraud, because like you said, people don't feel like they're committing a crime because they don't feel like anyone's sort of feeling a negative consequence of it. All that's happening is they're getting a benefit. But I feel like if organizations take a different approach and say, for example, let's say you get 10% off whatever you're buying when you join, and then after a year you can also get another 10% off, or after 2 years, so like say your contract or subscription or whatever it is ends after a year, if you then have another year, then you get sort of 20% off or something like that, something that sort of gives an incentive to stay long term and to sort of continue building a reputation with your current ID and account. I think that's the best way that organizations can probably sort of go ahead and counter this by not sort of punishing people that want better deals, but sort of rewarding those who want better deals. I think that's probably the best way to go about it.
I think you're absolutely right. I hadn't thought about that until you said it just now, but I think you're absolutely right. It's the obsession with new customers rather than retaining your old customers. And I do the same. I move around car insurance. I move around this, that, and the other because I'm getting a better deal by being a new customer rather than staying with my original provider. So you've nailed it. That's exactly it. That's what
genius. There we go.
Yeah, you've got it. You've sold everything.
Yeah, done.
Completed fintech. Anyway, I think that brings us to a nice little close to our discussion. So thank you so much, Francis, for bringing that article and talking to me about fintech. If you want to hear any more about anything we've talked about today, head on over to fintechtimes.com where there's plenty more news and insights over there. But very quickly, let's move on to what I learned this week. So each week, we are learning so much new information about the fintech industry, being on the Fintech Times editorial team, that we thought it'd be fun to share that with our listeners. So, Francis, what have you learned this week?
So this week I learned that the Digital Pound Foundation has joined Innovate Finance the Innovate Finance community to forward digital money talks.
Very interesting, thank you. And what I learned this week is that 69% of the UK adult population believes that social media firms have it in their power to do more to prevent scams, which I thought was really interesting. But anyway, thank you so much again for joining me, Francis. It has been a pleasure as always. Hopefully we will get back, the three of us, next week. But until then, have a great week, and I'll catch you on the next one.
Not to be too much of a Debbie Downer, but Tom's on holiday next week as well. So
oh
it'll
my
just be us
God.
again. But hopefully the week after. Providing
I'm on holiday the week after. I'm on holiday the week after. Oh no.
Then I'll sit with them. We'll all be back in the new year, the three of us.
The new year.
Yeah. See you next week.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.